Tobechukwu Ikpe, a Treasury Team Member at Access Bank, joins me for updates on the fixed income. Thank you so much for joining us, Tobechukwu. Let's start really now with the sentiments playing out here from midweek up until now, today's opening sentiments. Let's start with that.
Sorry, I didn't get the question. Can you repeat it?
Let's look at the sentiments playing out here, looking at the auction, the Treasury Bills auction, and then the opening sentiments we have today.
Okay, so opening sentiment today following the auction that happened on Wednesday is largely mixed. Market participants are still trying to discover market prices for the newly issued 7 September bill that was auctioned on Wednesday, and the rates jumped from 8.5% to 10% for the long end. So we've seen both buyers and sellers trying to price where the rate should be trading in the secondary market. So most trades on that bill are happening around the 8% to 8.5%, and apart from that, it's been a largely quiet market in the bond market, but for Treasury markets, it's just mixed sentiments generally today.
Okay, now, and having some analysis going on right now, looking at how this also affects the curve, going on beyond today, what's your expectation, your outlook? Do you think this quiet sentiment will continue?
Yes, given the level of system liquidity we've seen in recent months, we will see rates continue to trend upwards. The auctions for both Treasury bills and the bond auctions that is scheduled to hold on 19th of this month. So the general sentiment now is once the neutral rate levels are discovered, will most likely tilt to a bearish outlook for the Treasury bills and bonds markets.
Okay, now let's look at the trading of the naira as well, how we performed so far, looking at yesterday's closing figures at the INE window.
For the naira against the greenback, largely we've seen rates slip against the dollar year to date, closing at 436 levels, the highest we've seen at the official market this week. This is largely due to unmet demand from buyers looking for FX to fulfill their obligations. But yesterday we saw the rate strengthen slightly by about 10 kobo to close at 436.33. So we will see the CBN release the results of its retail auction that it conducted last week today, where it sells dollars to local corporates who are looking to fill some of their import demand for raw materials and machinery. So the CBN continues to sustain its interventions in that space. Meanwhile, however, the demand is still mounting for the greenback, and we might see continuing slippage in the rates.
So let's also wrap up now, looking at the paucity of funds now within the market. How do you think this is also tilting the balance, and how we see things playing out next week?
For next week, we expect a similar trend to continue. The CBN will intervene at the beginning of the week to provide funds for travelers, for people looking to pay their school fees and other medical bills. And later in the week, they are expected to conduct a retail auction also, where they sell to local corporates who are looking for FX to fill their import demand. And the demand from local players and internationals were always there, looking to buy the FX, any FX that's available in the market. So because of that, everybody is skewed towards the left-hand side of the quote, looking to buy dollars wherever they can get it, and the CBN is doing its best to meet that demand. So the next week we should see similar trends with rates inching upwards towards 437 levels.